Today is Monday. We on EURUSD, and I just want to go over today's trade that I took on Monday morning, which was today, and want to tell you why I taken it. So, as you saw in the video, the title of this video is Smart Money Concepts, Supply and Demand Trading Strategy for Beginners. And I want to go and show you the first thing that I do when I get on the charts and why I took this trade you see here. Okay, so I normally go on a higher time frame that's higher than the 15-minute for market structure, right? Right. Okay. So when I do that, here's the key. I zoom. Most people, when they do their structure, they zoom in. They don't know what structure they're looking at. But to actually know the whole entire structure and get a bigger picture of market structure when you're trading Forex is, for me, I like to zoom all the way out. Okay, so I'm zoomed all the way out. And what this does is it reveals to me at the actual structure on a broader perspective. So on the broader perspective, we're bullish. And I knew that. But here's the thing. We had all of this aggressive price action and unhealthy price action, and we had a fair value gap going upwards, okay? So we had all this unhealthy price action, aggressive movement going upwards, okay, that broke this previous structure, and we had structure here. And because of this gap in the market, when this usually happens, the market usually comes back, and it won't come back all the way sometimes, but most of the time it usually will come back into this area to tap into some of that money. Now, the reason why I entered here is I noticed on a lower time frame, like on the 5-minute, the structure when we zoomed all the way out is, if you notice, you see how it's revealing downward structure, bearish structure when I zoomed all the way out. So that's my little key, is zooming out. So I went on the smaller time frame because normally I take trades on a smaller time frame, such as 5-minute, 15-minute, anything below the 15-minute. I usually take my setups on, and for structure I use higher time frames. Okay, so we had structure going downwards, descending, bearish structure on the 5-minute on EURUSD. So I went on FX Street, and I noticed that we had news, and what I do is I only trade pairs that have orange and red news coming up. So what that means is orange and red, if you are familiar with Forex news and Forex data, that stands for medium to high impact news. So I noticed that there was Swiss franc news, and there was also Euro news. And then the Euro news was around, let's say 9:30, okay? And Switzerland is in Europe, so that news in Switzerland was around 2:30, and Euro news was in that's how it's displayed. Euro news was at 9:30. So what I did was, when there's news, I look for trades and pairs that have to do with the news that's actually going to be released in the next day. And so what will happen is when I do this, I usually will look for a setup to enter a trade before the news actually comes out or after the news. I don't want to trade during the news, but you can trade either after or before. It's just like when you what's it called? Because the news is telling you about something that's already happened usually, in most cases, in regarding Forex, unless it's a speech or something. And because of that, the move is over. So a lot of FOMC, fear of missing out, will happen in both directions, whether it's down or up. And then that will usually happen after the news, and then traders will get stopped out and all that stuff during the news. But I entered this trade here on the supply zone here earlier, before the news even came out at 9:30. So yeah, I entered this after the news at 2:30, because at 2:30's news for Switzerland, that created this movement right here, because the news simply just moves the market. Okay, that's a quick way to look at it. So the news at 2:30 a.m. in my time, in Eastern time, that was here. This was the news here and all this. So around after 2:30, before 9, we had some retracement here, and I luckily noticed that we had this gap here, and I was like, oh, okay, so we had this gap here and it broke structure down here, and also we're in down structure here. And I already had an initial bias of the market coming down here anyway, because we had this gap, this large gap here, okay, and the news as well, followed by market structure. So I did notice that if you're familiar with order blocks, we had some order blocks in the past here showing who's in control of the markets, and for most part we have a bunch of supply zones. Okay, so I saw the supply zone on the 5-minute or 15-minute. The 5-minute first, then I went to the 15-minute, to 15 minutes more clean. We saw the supply zone, entered there. And here's a tip, guys. Here's a quick tip I want to tell you guys. When you're entering off a supply zone, one tip to tell whether your supply or demand zone is valid is having a wick, like you can see right there on this with this arrow. A wick will usually tap into the zone, not candles, a wick. Because most of my trades, if you're in the Discord, most of my trades will actually have a tap, will be tapping in with a wick into my entry. There's never really a body entry. If I do have it, it's really rare. Because smart money tends to just tap and go. We don't really have, when you're trading smart money concepts and supply and demand, there isn't really much drawdown. And you will notice that the more you trade it, okay? So we had that entry there, and you're like, okay, so where do you usually take your profit at? So for me, my take profits are always liquidity zones. So liquidity meaning for me can be trend lines, because retailers like to trade on trend lines. So trend lines, support and resistance areas, meaning double tops and double bottoms. This technically was a support and resistance area because we on a higher time frame here. This is why you see the TP there on that green line here, and then we had this heavy selling pressure going in here. Okay, so yeah, some people will say, well, you could have lost the trade because the overall trend is bullish. That's true. Yeah, it could have just came down here and continued going up, but the fact is, I didn't have any indication for the way I trade. I didn't have any indication of any bullish volume taking over here, because ever since we had the news, even before the news, we were bearish here anyway on the 5-minute chart, 15-minute chart, and we had no bullish indication of any smart money letting us know that the trend is going to reverse anytime soon. So that is why I chose that supply zone. And if you're also familiar with Wyckoff theory about how the market just moves in schematics, distribution, accumulation, if you look closely, we have distribution there. Distribution when distribution is when buy orders in the market turn to sell orders. So that gray box right there, those mini gray boxes are distribution. So buy orders turning into sell orders. We had some buy orders turning to sell orders. So yeah, guys, so this is all confirmation of my trade being right. And so I just wanted to go ahead and make a video about this in case you're new to smart money concepts or supply and demand and you need a strategy. Here's a quick strategy for you. Look for structure on a higher time frame, meaning your highs, lows, and I have videos on that on my YouTube channel. Your higher highs, your higher lows. After you have your structure, then you want to look for what's called your supply and demand zones, okay? And those can be order blocks, those can be fair value gaps like I have here. And also, you want to make sure you just have, after that, some liquidity to confirm that you are right. I'm not saying it's going to be right, but liquidity will usually confirm that the direction you're looking for is going to be right. So meaning liquidity, double bottoms, double tops, trend lines. So number one, look for your market structure on a higher time frame, higher than the 15-minute. Number two, look for supply and demand zones. If you're selling, look for sell zones on the upper part of your structure. So for example, this zone that I took the trade off of initially, if you notice, it's on the mid, it's above the mid, sorry, hold on, let me just take the actual tool so we can see the actual. Okay, so here's the Gambox tool. Sometimes I'll take this tool to tell for my equilibrium, and that is basically just premium and discount pricing. So if you're selling, you want to sell and make money off of premium pricing, which is a higher price, then that makes sense because the EURUSD, the entry I entered off was around, let's say, 1.08797. That's what you would have entered on your MT4, MetaTrader 4. And so that zone was on a premium level because this was on the upper part of the range. I took the sell trade on the upper part of the range when we had overall descending structure going downwards. So if I was buying, I would look to take trades around this area down here where my arrow is pointing. But since I'm selling, I want to sell high, right? So I sold above the equilibrium. And if you want more help with this, you can join the Discord, or you can connect with me on Instagram. It's dynasty_wolves. But yeah, guys, I don't charge hundreds of dollars to join my Discord. I don't charge thousands of dollars. If you want the info, it's in the description, or go on my Instagram. It's all in the comment section, guys. I hope you guys got value. But yeah, guys, I wanted to make a quick video for beginners that want to trade supply and demand, and just you're tired of looking on YouTube for a strategy. But just if you have any questions about this video, just message me on what's it called? Message me on Instagram. It's all in the comment section and description. Okay, peace.